Okay, so this video is going to be about a business plan, a business proposal on avocados. We are going to go through this email that I received a few weeks back. We're going to go through the email itself. We're going to go through the business proposal, and I will point out why I don't like the business model. Um, this will be a case study, more or less, on how to finance or essentially fund these types of projects with investor money. So we won't necessarily touch upon the jurisdiction, meaning setting up a company or all of the tax possibilities, but just simply the actual deal flow itself of how long the money is locked up, how it's being used, the use of funds, et cetera, et cetera. So let's just go right to the email and see. So look, avocado trees in the Philippines. The Asian middle class is developing a taste for avocados. Demand is through the roof. Supply needs to catch up and prices are high. A company called Agri offers access to one of the few commercially viable sources of avocado development in Asia. So we're bringing you intriguing investment opportunities inspired by last week's Sunday edition where we took a look at vertical farming industry. Yes, I remember that email as well. So agri-developments, an alternative asset management firm focused on agriculture, is offering investors the chance to purchase avocado trees in the Philippines. Okay, so that is the investment proposal. They're already done the hard work of securing the land. Okay, check. Building the development, meaning chopping down the trees to plant the other trees, and getting the necessary government approval. Okay, zoning, planting trees. All right, now they're inviting investors to participate in one of the fastest growing agricultural markets in the world. In this issue, we'll take a close look at the deal, including why avocado demand is growing so quickly. All right, let's get into that. Why avocado supply might be unprepared to meet that demand. Okay. That's the call to action, the sense of urgency. How regional price differences create profit opportunities. Okay, those numbers will be hopefully quite objective. And then an in-depth IRR study of Agri's investment plan. All right, here we go. That's what we need. Um, Here we go. So let's go. Asia loves avocados. Is that so? All right. So avocado demand is picking up, and one region in particular is driving this growth is Asia. An astounding number of Asians are becoming middle class. That's true. We can speak to that. Okay. So, in fact, according to academic definitions, 2024 is expected to be the year in which a majority of Asia goes from the poor to the consumer class. Okay, here we are. Asia's consumer tipping point will occur in 2024. We are here. We are at the middle class reality, no longer a poor nation, a poor region. Um, yeah, so the last decade of the 2010s was up, 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 a little bit of corona downness, and up some more. So that's really just amazing. Okay, so spending, consumer class, poor and vulnerable. Okay, here we go. And in line with the fruit's reputation, these newly minted members of the middle class are developing a taste for the avocado. Sure. Between 2014 and 2019, avocado imports to Asia climbed by about 40% annually. There you go. Far ahead of the global average. Interesting. China has been a key driver of this growth, right? Last year, China overtook Japan as Asia's leading avocado import market. Okay. So, and this is a trend with an extraordinarily high ceiling. Avocado consumption per person in Asia is still a fraction of Western averages. Oh, okay. So consumption per year, China is consuming much less than Australia. It seems these Australians really like their avocados, huh? Then we got America. Then we got the European Union average. Then we got Singapore, which is one of the most developed countries on the planet, right in the middle of Southeast Asia, and they're still only consuming less than 1 kilogram per year per person. All right. Hong Kong even less, Japan even less. All right, moving on. If similar growth continues, Asian avocado consumption could exceed the combined consumption of the US and Mexico by 2030. That makes sense. That makes sense when you say Asia as a whole. Asia as a whole, which means all the way to Turkey, all the way to Palestine, all the way to Northeast Russia, Asia as a whole. Okay, that I agree with. As avocado demand skyrockets, though, something else is starting to falter. Avocado supply. Okay, avocado supply can't keep up. Avocado trees thrive in humid subtropical weather, and there just aren't many places with that type of climate. Okay, the result is that the vast majority of avocados are grown in a few pockets of the world. Overall avocado exports amounted to about 3 billion kilograms in 2021. Of this amount, more than 65% came from just 4 countries: Mexico, Chile, Colombia, and Peru, meaning all in Central and South America, or at least 65% concentrated in just 4 countries. Okay, so that's right. Mexico is producing nearly 41%. Peru is producing nearly 20%. Chile and Colombia are producing nearly 6% combined, and the rest of the world is only producing about a third, the remaining third. Okay, but there are some big problems in creating supply. The result is that avocado prices are significantly higher in Asia than in Europe and the Americas. Okay, so in Mexico, it's $5 per kilogram. In the US, it's $8 per kilogram. In France, it's $9 per kilogram. In the UK, it's $7.50 per kilogram. In the UAE, it's $12 per kilogram. In Russia, it's $12.50 per kilogram. In the Philippines, it's $10 per kilogram. In Japan, it's $18 per kilogram. Hong Kong is $12 per kilogram. Singapore, 13. Okay, here we go. For enterprising investors, the situation looks ripe for disruption. Okay, let's see here. This is a case study. The trade is simple. Grow avocados in Asia and sell them for premium prices while saving a ton of money on expensive shipping costs from Latin America. Okay. But pulling this off is tricky. There are only a few countries that currently produce avocados at a commercial scale, most notably Indonesia and Vietnam. That's correct. And even this is a bit misleading since Asian avocado cultivation tends to differ from Latin America. In Indonesia, for instance, which produced more than 600,000 tons of avocados in 2020, most cultivation is for local Bambang or Bahagia varieties, correct. That contrasts with Latin America, which focuses on the globally popular and highly lucrative Hass varieties. Okay, in fact, just one specific region in Asia has historically been capable of producing Hass avocados at scale, a small mountainous section of the Vietnam Highlands. Okay. But a few years ago, that all changed with the development of Hass avocados in the Philippines, opening up an intriguing new avenue to feed Asia's growing avocado appetite. So, as we discussed last year, the Philippines is experiencing a foreign direct investment boom, that's correct, with annual inflows climbing from less than 2 billion annually a decade ago to about 10 billion annually today. That's correct. A chunk of that change is going to modernize and grow the country's agricultural sector, and back in 2019, Dole spotted opportunity to do just that. At the time, the Philippines had a small avocado industry focused on local varieties. After evaluating the climate and land, though, Dole wanted to try Hass cultivation in the country. After proving the fruit's viability, Dole quickly secured government approval to export the Hass variety to China. Previously, the Chinese government had not approved Filipino avocado varieties for import. As a result, Dole has an effective monopoly over the Hass avocado trade in the Philippines for years. There you go. But that monopoly didn't last long. A few years ago, Agri-Development secured their own plot of land in the region for avocado development, joining Dole in the lucrative business of satisfying Asia's Hass avocado demand with locally grown produce. Okay, moving on. What is the company? Okay, so we could continue here about the business itself. So they say that they are not an end-to-end company. There's no brand that they, really are pushing. Instead, they are an alternative asset management company, yes, of course, focused on the agricultural sector. Well done. Okay, so the process. This company identifies attractive opportunities in the international agricultural market, partnering with independent experts and industry professionals to do due diligence deals. Okay. Once an opportunity has been evaluated, this company then secures funding to back the deal through a mix of self-financing, the firm's own capital, and investor financing, which could be, retail individual investors, family offices, hedge funds, etc. Okay, so this company partners with local agricultural professionals to manage the developments on a day-to-day basis, right? Local operations, and then finally, when developments are ready to be harvested, this company then sells the produce to retail partners, providing investors with cash repayment over time. That sounds great. Okay, so now, Agri's cultural footprint. Okay, in the past, the company has worked on development opportunities for bamboo, durian, which is just all over Southeast Asia, guava, and more. But one of the most recent projects could also be the most lucrative, as Hass avocados are grown in the Philippines. So, 185 acres of land in the Bayawan region of the Philippines, located on the island just north of the Dole development. Okay. And this just isn't just a random parcel of land. The team specifically chose this for 3 main reasons. Close proximity to export. The Bayawan development is just 90 minutes from a major airport and seaport. All right, that's great. Ideal agricultural conditions. Bahia 1 is already a hub of Filipino agriculture with up to 80% of land in the region already being cultivated. That's great. Heavy rainfall. Avocados are a water-heavy crop, but is particularly why Latin America is struggling to increase production. Bahia 1 has about 30% more rainfall than traditional avocado producing regions with 90 inches of rainfall per year. That's nice. In order to accelerate the speed of development and take full advantage of the current market imbalance, this company is accepting outside investors to participate in the Bio One opportunity. This is not a standard debt or equity investment offering. If someone were to participate, they would be a full-fledged owner of the specific avocado trees on the site. There you go. You can even come visit and camp out next to them. That sounds nice. Let's take a look at how the numbers shake out. Okay. So, investing in this company's avocado development. We can't analyze an agriculture investment like this the same way a traditional investment. Why do you say that? Like many agriculture opportunities, this company's investment is a fixed term investment, 25 years, with no principal return at the end. Oh, okay. If you take a look at the documents that are provided, you'll find return figures ranging from 18 to 27%. Crucially, though, these figures are average annual yields. Okay, average, right? But okay, we'll get into the details of growing trees. Since principal isn't getting repaid, yield doesn't tell a full story of the return profile. Here's what we mean by that. Imagine you invested in two bonds, each with a 10% annual return. While the first bond repays principal at maturity, the second does not. Despite both having the same yield of 10%, they both don't have the same internal rate of return, IRR in bond terms, a yield to maturity. In the same way, to fully understand this deal, we need to conduct an internal rate of return analysis, not just rely on the yield. Here are the basic terms. The term expires in 2045 with no extension. The initial investment is $13K for a minimum of a 10 tree package. That's quite expensive for 10 trees, guys. Management fee is a flat $25 annual management fee per tree per year. Okay. And then a harvest fee, 5% of produce sale price. Okay. That's like the fund management fee. And then tree survival. This company will replace any trees that don't survive with similarly aged ones from their inventory. Sure. But other variables in our analysis are a lot more uncertain. Uh-oh. The sale price per avocado, for instance, will vary with market conditions. All right, let's see. This company has a minimum price guarantee in place of 2.75 per kg, or about 55 cents per avocado, assuming a 200-gram average fruit. But that's almost certainly lower than what the realized sale price will be. Wholesale prices are generally about half of retail prices, which can easily exceed $10 per kilogram in Asia. Realistically, sale price could be closer to $5 per kilogram or $1 per avocado. Okay, so double. The annual fruit per tree is also highly uncertain and unstable. So this company's brochures assume that yields can scale from 50 avocados per tree in a year, 4 to a terminal yield of 600. Okay, is this reasonable? It's hard to say, since Haas cultivation in the Philippines is so recent, but there's some data from other regions. One academic study of 3,000 California Haas avocado trees registered a mean yield of 51 kilograms per year, or about 255 average-sized fruit per year for one tree. That same study also determined that the median yield was about 28 kilograms, or 140 fruit, indicating that the mean is skewed by some super productive trees. Okay. The U.S. government guide to avocado farming in Tanzania lists Haas terminal yield as 800 fruits per tree at year number 8 for that tree. So similarly, a USDA report on avocado farm in Mexico notes trees yielding up to 160 kilograms per year, or 800 fruits per tree per year, although whether this is typical or exceptional isn't mentioned. Overall, this company's terminal yield of 600 seems reasonable. Okay, but given the uncertainty, skewing conservative is smart. Okay, that's why they're tampering down the numbers. So all the spreadsheet allows you to vary input parameters from the deal to come up with an expected IRR figure. Based on that spreadsheet, here's what the expected stream of cash flows looks like for the 22 years remaining on the term, with assumptions detailed below. Right, so which means that right now the trees are already at year number 3, which means they're about to start yielding fruit. Okay, so the land has been acquired, the land has been maturing for 3 years, and now they're ready to start yielding, which is at the point where the company is going out to retail investors to buy the trees per tree, and then get locked in at a certain price for yield over time. Okay, now, cash flow. So Fruits per tree per year kilogram, dollars per kg, total US, harvest fee, cash flow. Okay, so based on these assumptions, we now come up with a pre-tax projected IRR of 16.85%. Not bad, though not quite the same as the yield figures. Note that this internal rate of return is sensitive to the assumptions we've made. For instance, if we assume the terminal yield caps out at 250 fruits per tree, the IRR drops to just 12%. If you use the fruits per tree assumption that this company is providing, the IRR jumps to 17.91%, almost 18%. If you assume the original yields true and a price per avocado is the low end, the minimum, the IRR falls to 9.42%. So there's room for nuance here depending on your assumptions, but even with conservative pricing and lower yields, the IRR does look promising. So all I'm going to say in summary for this is that it's yeah, as opposed to taking a lot of land, in this case I think it's 185 acres, and then divvying up the harvest based on who's buying lots of the land. They're now doing it based off individual trees, and so you're buying individual trees at a fixed price, and then you're hoping over the next 20 something years that the tree will then pay out, its yield and grow, but you're really tied to the tree as opposed to other investment opportunities where they average out everybody's tree on the whole piece of property based on lots. So each lot is a proportional size, an equal size, and then they just simply sell the lots and they average out each lot harvest. This one is a little bit more specific because then you can, how do you really police which tree you own? Okay. So that's one of the biggest critiques I have with this this business model, because you're not necessarily watching them as they harvest the trees for avocados. So with that being said, not a big fan of the investment proposal as it is, but it's good to go through it as a case study. I've seen similar ones from other companies in Colombia and elsewhere, growing different types of fruits and vegetables and trees. This one just seems a little bit, yeah, here's the thing. With all of the above projects, they don't really talk about what was the original cost of acquisition of the land. They talk about government, certificates and zoning. So what about years 0, 1, 2, 3? Why didn't they go to investors at year number 0 and say, look, if you have a really long time horizon, why don't you come in at like a more venture capital stage and get the real estate with us? And then in 3 years' time, we will toss it off to retail investors. This seems to be the year 3 point where the people that have already bought in at year 0 are now handing it off to retail investors. This is their IPO, right? This is the VC that's circling or cycling out funds type of play. So this is my opinion on this this investment opportunity. Was sitting on this email for a while, trying to think of how to critique it, but at this point, although I'm not necessarily a spreadsheet savant, these numbers are not that happy. And right, you can see at the bottom of the article, even yeah, the lower end is 9.5% at the most conservative, and the highest is really 18%. You're kind of trapped. I mean, the numbers could be really outstanding, and you have management fees and harvest fees, and yeah, I just don't think that it's as you're kind of trapped. You're kind of trapped with the averaging out. So you're averaged out, even though the investment is per tree, but you can't measure your specific tree's harvest. So it's still eventually averaged out. So I just don't like the lack of transparency about ownership of trees and the actual harvests. And also, a point of sale, unless you're getting reports about harvest time and actual market price and people buying your avocados at the wholesale price of sale and import fees. If this were to be more transparent, all those prices, then you could run the numbers, but all of that is sort of obscured, which makes me as a retail investor think that the company is pocketing all those profits and they're forcing the customer to be trapped in these low single digit numbers of IRR. So I'll leave it there for now. I wanted to analyze it because it's a pretty nice sales pitch, but I'm just not buying it. So good luck with this company. Wishing them well. But I've seen this type of investment proposal before, and it's not nearly as developed as I think it needs to be, or they should be more coming in at an earlier stage and offering the retail investors opportunity to actually acquire equity, meaning the land itself, right? Okay, leaving it there for now, guys. Have a good day.